Ladies and gentlemen, welcome back for the update. Wednesday, October the 2nd. HOLO is down 12% today. 4 cents for 0.047 to 34 cents. It was trading between 34 to 38. And we can see why it broke the streak of positive days because the volume was paltry. It was very low. Not very low, it was about the average. And if we look at the last 5 days, it's been a steady rise, except for today. So let's check in on the subreddit. So over on the subreddit, there is really nothing to report, just people asking the same questions over and over, just in the dark. People are in the dark regarding, we're all in the dark right now, except for the HOLO administration. The only update I can bring you today is Clay Trader, who is a YouTube channel on, obviously on YouTube, a channel with over 600,000 subscribers, a day trader, mentioned HOLO because he talks about the top 10 most popular stocks of the day. That's what he goes through. And he also said, hold on, let me just read here. Full-time day trader. Okay, so pretty much the opposite of my channel. I am a part-time, how do you say?
Hey, I'm Clay, or as most people...
Long-time, I don't even know the word right now. I'm a long-term investor and part-time. Yeah, part-time long-term investor. And my browser's crashing right now. I'm not sure why. Okay. 46 million views. So let's look at the, I wanted to look at the video on HOLO, that featured HOLO. Not that he did a feature on HOLO, more that he talked about it briefly. And I think that was a day ago, on October the 2nd. So I'm going to fast forward to that part. Let me pause for a moment. Okay, we're not pausing for whatever reason. I'm just going to talk about what he mentioned before it loads. So basically, okay, I'm not going to talk about what he mentioned. I'm going to talk about why he's mentioning it. It's because HOLO hit the 10 popular, the top 10 most popular stocks of the day. And as I mentioned in other videos, the fact that they are hitting the radar. Sorry, I can't really come up with my thoughts right now. Let me just take a breath here. Okay, so the fact that HOLO is hitting the radar, I don't know what the term to use here is, but they're making the radar. They're a blip in the radar, but the fact that they're showing up in people's lists because of it being a top 10 popular stock is going to drive the volume much higher. And that is really, oh, here we go. So here's the HOLO part. Let me just let him talk here once I get to the beginning of it. It's only about a minute or two. It's not a long clip. Okay, so let me cue that up. But as this is queuing up, overall the report here is very positive, or positive. Maybe I don't want to exaggerate it, but it is a positive report for HOLO. So let me just turn down my volume because I'm going to talk a bit louder than normal. So I think we have bright days ahead for HOLO. It's all a matter of when, not if. We already know the reverse stock split is going forward. It's a 99.9% chance it is going forward. Again, the people overseeing the company don't want to lose 108 million US dollars. They'd be out of their minds to do that. But what they do want to do is they want to capitalize on their assets and double, triple, quadruple them. They want to milk it for all it's worth. So yes, they have 108 million US dollars at the moment, and they're looking to increase that to possibly $500 million US dollars. If they can really max it out, let's say it goes 10 times to what it's worth, they would have over $1 billion, wouldn't they? So, oh, here we go. So he's at HOLO. Kind of got distracted there. Guess I'm used to seeing that. Okay, here we go. So I'll unmute it.
Down here, so we'll see if the price can build in, and continue to build in some upwards momentum. Next one, HOLO, and a little tricky to talk about because it's all about perspective. Any sort of day trader, flipper, scalper that was buying right there, and their plan was to buy and sell within 7 minutes. Well, then from that standpoint, the things are looking pretty rough because there was a bigger pullback. But big picture wise, as I've already talked about, these lows keep getting higher and higher, and that's the name of the game. You can see a low there, a low there, low there. If you envision those as stair steps, you have stair steps progressing the upward direction. Or if you just don't even, if that's too complicated, just looking at the moving averages, you can see the purple line there. Nice upward slope to it. Price isn't anywhere close to it. So again, from the overarching standpoint, everything is perfectly fine. And I realize that could sound crazy if you're a day trader that bought right there, but that's why I'm trying to distinguish. There are multiple ways to approach this. So, but big picture wise, yes, definitely still a good looking chart in terms of areas of resistance, and specifically the near term areas. That little area of resistance right there is fascinating, especially when in the last 30 minutes you can see the price was knocking on the door. Couldn't quite push through it, but it was certainly within the realm, and it certainly still is within the realm of reason that the price could push up through there on Wednesday. Of course, no guarantees, but I mean, the price is literally right at that area, so keep an eye on that. And then, of course, just from an overarching standpoint, yes, that level up there would be the key area of resistance, right around 47. But one hurdle at a time, and let's just first see, can the price break above that initial trend line right there? So grab your popcorn for Wednesday. Next one here.
Okay, so one thing I like about his channel is his slogan is trade without emotion. Something like that. There it is, trade without emotion. That's a very good approach. I do want to say, however, that the technical analysis on a day-to-day basis is flawed.
Hey, I'm Clay, or as most people in the trading world know me by, Clay Trader.
It is flawed because day-to-day, hour-to-hour, if you know how corrupt the stock market can be, it's not foolproof. It's very high risk. Looking at the stock market from a long-term point of view, when you look at it, zooming out, the 6-month graph, or say chart, 6-month chart, 1-year chart, 5-year chart, it's a lot more predictable and stable because points of resistance or levels of resistance and support are more clearly defined, especially if you employ the quick fingers Luke method, which I believe is pretty foolproof, especially if you adopt this approach of trading without emotion. So I'm going to close looking at the HOLO chart, again based on looking at what Clay Trader looked at yesterday, saying it has to break out over 40. I do agree to some percentage, but what is more necessary is not so much the price just being driven up artificially. It is the volume. It's a combination of the price and the volume, really. This is real resistance right here. 43 cents. And then even more defined when we zoom out, $3. That's a sharp resistance. $2. And then a new resistance point of 70. I would probably say $1 to $3 is really the true resistance. So just make that round it off to $2. but that is not taking into account the pump and dump, short squeeze, price spike, whatever you want to call it. That doesn't take that into account. So we can see the real resistance based on its past history with short squeezes / pump and dumps. Let's just call it SS and P and D, is around $100, 112. Again, this went to 100. This also went to 100. Doesn't read in the chart, but it did go to 100 in fact. Barring a $100 price spike and bringing us back to realistic expectations, I think 70 is not out of the picture. So something between 40 to 70. What is that? That's it's roughly 55. So 50 is pretty realistic as well. I'm not going to I'm not going to rule that out. I was game playing. Sorry, my grammar's all over the place. I can't really find the right words today. My vocabulary is pretty messed up today, but I'm going to say that my were they war game, like I'm wargaming it, but in the stock market. So my gaming different scenarios for the price was pretty much done to death, yeah, on the previous video yesterday. But let's just rehash it just briefly. Again, once the price spikes after the reverse split, it will probably take a week after the reverse split takes effect. 7 to 8 days, maybe even 10 days. We'll see movement up to at least $20. I want to say $20 is the floor. And then from that point on, 7 days from the $20, whatever the value is, from 7 days from the spike, or the reverse split rather. So 2 weeks from the reverse split, we could see the real peak, which I am forecasting as something like $40 to $50. Could be 77. That's a lucky number we keep bringing up here. Hopefully it's as high as 100. Could be even 200, but I don't think 200 is realistic when you take into account the previous spikes, when you take into account the outstanding shares. That is a very big factor in play, outstanding shares, or number of outstanding shares. And I believe that will be dwindled down to, was it around 50 million or 20 million shares? I forgot the exact number right now, but it's still a large number. It's something like 20 million or above. Whereas in the third spike, when they had a reverse split before that event, the number of outstanding shares was a lot less. I think it was 5 million or less. It was less than 10 million. I know that much. So there's not much to report today. I don't want to keep droning on because your time is valuable. So having said that, thank you for your time. And I don't know if I'll upload a video tomorrow, maybe tomorrow night. If not tomorrow night, then Friday after the close of the trading session. Most likely I'll just do that to do our weekly recap. So thank you very much. And till next time, God bless you all. And God bless your investments, unless you are a short seller.